We've got a weaker dollar, global growth picking up, forward-looking indicators picking up. Technology should outperform. This is very much like the 2018 episode where the Fed stopped hiking. That was December 2018. The markets just went on a tear. And generally speaking, at this point in the cycle, the kind of macro spring, you tend to see the S&P doing this, the NASDAQ doing this, growth tech doing that, and crypto doing that. So I'm now bullish risk.
Hey guys, welcome back to Let's Talk Crypto. In today's video, we have Raoul Pal of Real Vision talking about the current state of the market and his macro outlook on the economy. In regards to the business cycles, Raoul believes we're in the middle of a recession which will be a mild one, and he's looking at a number of indicators, particularly the ISM, which suggest we will hit the bottom of the recessionary wave in April this year. Raoul thinks the Fed won't increase rates much further, and go into a pause very soon before returning to QE. That of course will be a great environment for risk assets including crypto. He also believes this is an ordinary bear market, not an extraordinary one, and that we have already hit the bottom for crypto in October of last year. Let's listen to Raoul as he gives his take on what to expect from the markets in 2023, and why he's so bullish on crypto. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
So where the hell are we right now? I think I've outlined to you in the past, and certainly on Real Vision, at depth my thinking. My thinking is that we are hurtling off the edge of the cliff into a recession. That recession we've been forecasting, Julian Bittle and myself at Global Macro Investor, from about this time last year actually. We saw it in the forward-looking data, and the current data is catching up. So we're now, I use the ISM as probably my best guide to the business cycle, and that's kind of at this 48 or so level, 47 point whatever level, and really just below 47 is 100% chance of recession. Now, all the forward-looking indicators like new orders are completely off a cliff. Employment, prices paid, you name it, every single indicator. We have a database of 1,500 indicators at Global Macro Investor, and it's all falling off a cliff. So this is the point where you get to on Twitter where everyone goes, oh my God, there's a recession. Surely stocks are going to go down. No shit, Sherlock. They've already gone down. The NASDAQ went down 37.7%, I think, from the high. But what's interesting is that the forward-looking indicators are starting to suggest that we will hit the bottom of the recessionary wave in about April. So we're likely to get, I think, 2, maybe 3 quarters of negative GDP. But I think it's more akin to the 1990 style recession, which was the stock market fell 20%, the economy fell 2%, ISM went down to 40 or so, it all recovered, there was some overhang, the economy was slow for a while, and then eventually recovered. A normal garden recession. That's what I think we're in the middle of. What's happened is the markets have been forward-looking, they discounted the recession fast, and they're now starting to discount the pickup on the other side. And that's coinciding with the rate of change of Fed increases coming down. The ECB are the same, the Bank of England the same. Everybody's slowing down their rate increases and are going to pause mode. Whether we get one more hike or not, I doubt it actually, but there's a chance we get one more pause. The bond market's starting to realize that that's probably the case as well. Also, global liquidity, M2 cycle, stuff like that, that's been picking up. It started with China, and it's going to start resonating throughout the world. Things like the falling dollar, falling commodity prices start picking up this kind of rate of change of liquidity. That also suggests that we kind of are bottoming around these levels. So we've got global liquidity bottoming. We've got the rate of change of interest rates. That's taken the pressure off the neck. You know, Jay Powell's had his foot on the neck of the markets and the economy. So he takes his foot off, things can rise again. So that's kind of what stage we're seeing now. I think I just find it really, really difficult to believe when forward-looking inflation indicators are down 2% or less by June and flipping to negative year on year. I just don't see where that's coming from. Now, again, maybe I'm wrong. Maybe we do have further bear market. This is, lo and behold, one of those magical bear markets, which is the down 50%er. We don't get those often. But if it's a magical down 50%er, then you'll be right. If it's a ordinary bear market like 1983 1990, the 1950s, they were all about 20 to 30% corrections. So that's the ordinary one. Once you take out the three or four big bear markets that went over 50%, I think the average for a bear market is 26. So, I can't get there.
Looking at all his indicators, Raoul is extremely positive that the worst is behind us, and that we now have a perfect set of signals across the board that make him extremely bullish on all risk assets, especially crypto, which he believes will outperform all the others. When it comes to regulation and answering some of the questions from his viewers, Raoul expressed a pretty strong opinion about Gensler's role in all of this, so make sure to stick around.
I keep asking the poll, everybody's still very bearish. All of the sentiment indicates everyone's maximum bearish. And using my macro framework I've been using for 18 years, I just don't think that's the case. Now, we're talking probabilities, not certainties, so anything can change here. But my view is that overall, is that the worst is behind us. It bottomed in October when I wrote a big Twitter article and a big global macro investor piece calling it the bear market killer, which is October. And bang on schedule, the whole bear market stopped in October. I had lots of technical signals like DMARC counts telling me monthly and weekly and daily that this was probably the low. I'd already had that in crypto back in June for ETH, and then again in Bitcoin and others into October. So we've got this perfect set of signals across everything. The liquidity cycle picking up, maximum bearish sentiment, the worst I've ever seen. So I'm now bullish risk. And I've been flagging this for a while, and I flagged it when I started buying crypto in June, and I flagged it when I re-added it. And I've been talking about, I think the inflationary pressure's coming. I think inflation goes negative next year. Actually, this year, sorry. I think the rate of decline of commodities is much sharper than anybody realizes. I think wages are rolling over. I also think rents are rolling over. So the whole lot is coming down, and that will go all the way through till 2024. So we've got rid of the inflation. We've got a weaker dollar, global growth picking up, forward-looking indicators picking up. Technology should outperform. This is very much like the 2018 episode where the Fed stopped hiking. That was December 2018. The markets just went on a tear. The Fed eventually cut rates in August 2019 and then stopped QT in September 2019. Over that period, I think Bitcoin did 285%, and many of the markets did really well over the course of that year. And generally speaking, at this point in the cycle, the kind of macro spring, you tend to see the S&P doing this, the NASDAQ doing this, growth tech doing that, and crypto doing that. And that's my expectation that if you're, not volatility adjusting the returns, you want to get the fastest horse, it's likely to be crypto, then it'll be technology stocks, the growthy end, stuff like ARK is already up 100% or so. Then it'll be the NASDAQ, and then it'll be the S&P. So that's kind of where we are. We then start focusing going forwards on, okay, what else does this mean? And this is what you're starting to see in things like gold. They're picking up the potential for easing, negative real rates, that kind of stuff. And that's the next phase that I think we come into in the latter parts of 2023. And I think we'll see significant easing for a whole host of reasons in 2023, back end 2024, and back to quantitative easing that I think we'll get by in 2024, maybe even 2023. We'll wait and see. So that's where we are. Cyclical pressures down to the secular trend. I love my secular trends. My big secular trends are India, technology, exponential age technology. That's a whole host of things, from robotics to AI to EV to distributed data to metaverse. All sorts of things come in that bucket, and I've been writing quite a lot about that over the last few years. I'm bullish on copper, as I said, carbon, for those reasons as well. And then crypto is the bigger bet for me because I think it has a higher expected return, comes with more volatility, but I'm happy to stomach the volatility because I've got an income, thank God. And so that means I can allow the volatility of my portfolio moving around because I've got money coming in. But if you're trying to live off crypto, it's bloody difficult because it goes up and down a lot. Any of these long technology names, I think that's extremely risky, but has a very high reward. And crypto is phenomenal for that. And I think, ETH is risky enough and has enough fundamental structural benefits and opportunities that I think it should be fine. So I would definitely go with, It's crypto, it's exponential age, it's the kind of stuff I've been talking about. Raoul, is this the start of a new bull run in tech? Will crypto follow through? Crypto led it, and I think that it is, and tech is following through. So yes and yes, and I've been saying that for some time. So it's not like, oh, I'm the price action. I was saying that as the prices were collapsing in October, and when the price was collapsing in June in crypto, that I've been positive. No, I hope I'm right. I'm not always right, as we all know, right? What do you think about ETFs in crypto? I think we've all learned the lesson that they're terrible, in terms of anything that exists is based on a futures contract. Will they come? The SEC is just a mess. So I doubt it. I think they just want to have that battle, and that battle is, we don't want you to have that. I mean, again, Gary Gensler, I've said this on every time I've done this show, is that guy needs to be fired. He's letting people down. He's letting a whole industry down. He's holding America back. And it's just inexcusable. It's inexcusable to allow shitty ETFs to launch, to blow up, and then forcing people to use closed-end funds that trade at massive discounts, allowing ETFs on pretty much anything you want. But when it's crypto, oh, no, sir, can't do that, sir. And everybody loses fucking money. I mean, he's cost people 50% because of that grayscale, because he wouldn't approve a product that works. It's shockingly bad.
Sentiment among various analysts in the market is very mixed. Some are saying we're still going down from here, while others are already looking forward to the next bull run. Overall, Raoul is extremely bullish on crypto, and it's his conviction that we already hit the bottom of this bear market, heading into crypto spring. But is it really safe to say that the worst is over? What are your thoughts on Raoul's bullish perspective for 2023? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.